Well, the bulls are ruling Wall Street today. The Dow hit a record high, and the S&P 500 is now just 6 points off its all-time record close. Our coverage of this record-breaking day rolls on tonight here on CNBC. Money manager Peter Schiff is president of Euro-Pacific Capital. He's also the author of the book Crash Proof: How to Profit from the Coming Economic Collapse. I think I know what side he's on. Equity trader Larry Levin is president of secretsoftraders.com. All right, Larry, you've got skin in the game. How strong are the bulls right now?
They look real good, that's for sure, Melissa. You know, we've got a lot of bad news on the market, and we just keep fighting it off. Obviously, the Fed dropping the rate a half point was a big help, but certainly, the bulls are in charge, and we continue to see, good buying action in this market.
Peter, what do you think?
Well, I disagree. I think the bears are still firmly in charge, and let me explain why. Let me put, first of all, these nominal gains for the Dow in perspective. Since the Dow hit its high of 14,000 in mid-July to where it is today, just back above 14,000, priced in the euro, it's actually down by more than 3%. Priced in the Canadian dollar, it's down by more than 6%. But it gets worse. Against gold, the Dow is off 8%. It's down about 10% in oil. Then it's down about 12% in soybeans, and it's down about 30% if you want to price it in wheat.
I don't use the Canadian dollar to buy anything.
But it's a measure of value. These price gains in the Dow are an illusion. And if you really want to see what's going on, in the last month, since the August lows, the Dow is up about 12%. But the gold stocks that I've been recommending, or the whole index of gold stocks, is up 40% in that same time period. So the bears who are betting against the U.S. market and buying gold stocks are making a lot more money than the bulls who are still buying U.S. stocks.
Larry, what do you think? Do you think those gold stocks have topped out?
I don't, 750 in gold is the top that we saw last year, so, that's yet to be seen. But if you're looking for a technical level, 750 would be one. We haven't been above there very long. So, if gold gets back down to 730, 720, those gold stocks won't be looking very good. But, as far as, these stock gains, they're not illusionary in any way. We set a new record today. We continue to move higher, and these stocks, there's a lot of buying behind this.
Remember, it doesn't matter how many dollars you accumulate. What matters is what they're worth, what you can buy with them. And what you can buy with the dollar is going down. And based on these irresponsible rate cuts, the dollar is going to lose a lot more value, and the value the dollar loses is going to more than offset any nominal gains the Dow can eke out. And eventually, though, when the Fed, when Wall Street realizes that these rate cuts are not going to stop the recession from coming, they're not going to stop the housing market from imploding, even these nominal gains are going to evaporate.
Larry, do you think there's a recession coming?
I really don't think there is. It's yet to be seen when the bottom of the housing market comes in. But if the bottom of the housing market came in early 2008, we'd be above 16,000 in a heartbeat. So, that's really what we got to look at. We're not there yet. I wouldn't say that. But if we get it, that's the bad news that everybody's talking about. That's the bad news that everybody's waiting for the other shoe to drop. If that bad news, goes away, we're going to continue to move on.
Now, remember, the bottom in the housing market is years away. Who knows when it's going to be? It's just getting started. And remember, our phony economy is based on our ability to borrow money from the rest of the world and to buy imported products, and we're not going to be able to do that. We're telling the rest of the world that we're not going to pay them back. The dollar's in free fall. Credit is going to keep tightening. It's going to get harder for Americans to borrow money to do anything because people in Europe and people in Asia are not going to want to lend us any more money.
Peter, people have been saying that they're going to stop coming over here and buying bonds forever. And it hasn't happened, and there's no sign of it happening. Why do you think all of a sudden it's going to happen now?
What do you mean there's no sign? There's plenty of signs. Why do you think the dollar is falling through the floor? It's because foreigners are not buying enough of them to keep it supported. And look what's going on around the world. I mean, gold isn't at 750 by accident. Oil's not over $80 a barrel by accident. These are all signs that the world is losing confidence in the dollar.
But debt's not on sale. I mean, the treasuries aren't on sale.
Excuse me?
Treasuries aren't on sale. Debt is not on sale.
Well, U.S. Treasury bond prices have not collapsed to the extent that, if mortgage-backed prices or, securitized obligations or other corporate debt. But I think eventually treasuries are going to collapse as well. Right now, you still have a lot of foreign central banks.
But that's my question, is that everybody says eventually these things are going to collapse, and we just haven't seen it.
Well, look, but meanwhile, the people like my clients who have been preparing themselves for years have much more money because we've seen this and we've taken our money and we've invested in Asia, we've invested in Europe, we've invested in commodities.
Well, we are at a new record. Did they miss out on that run?
Yeah, anybody who's invested in the stock market is the same way.
The gains in the U.S. market pale in comparison to the gains in any other market anywhere in the world. I mean, the U.S. market has been one of the worst performing stock markets in the world for the past 8 years. You guys have to figure this out.
I mean, all I can tell you is we got another record today. We continue to move higher. If we get to the bottom of that housing market, we're going to keep going up.
Too bad you can't take a look at my clients' brokerage statements. Then you'd see what new highs are.
All right, gentlemen, we'll leave it there. Thanks to both of you for joining us.